we facilitate the places where those formidable memories that you create are taking place. And that's why I went back to real estate, because we make a difference in people's lives in a big, meaningful, impactful, long-term way. I mean, the reality is I love what I do. This is super
Yeah, I can
fun,
tell.
but I also do it to make a lot of money. Lots of people want to be in real estate, but they're not sure how.
We were in negotiations for investing in real estate. They're winning, they're making money.
What's up, everyone? Welcome to the Real Estate Educators Podcast, where we provide the education you can build on. I am your host, Kevin Amolsch. This podcast is so much fun because we're helping real estate investors and real estate educators. So if you're out there building a portfolio, rental properties, fixing and flipping, developing, or if you're providing content to investors, this is the podcast for you. I have a very cool guest, lots of experience today, Dell Wills. He's a real estate developer, but has been doing it a long time. Sounds like, Dale, over 50 different projects for what, 1,500 units you've developed in your career?
Not career, just with the current company, Central Companies. So that's what
Oh,
we've
so it's
done
even
in the
bigger than
last
that.
about 12 years. Yeah.
Oh, that's fantastic. All right, so take me back, man. How did you, like, why real estate?
You, it's interesting. I started in construction, and then I did banking. I did mortgage banking, then I did development banking, construction. Construction lending, and I loved it. I loved every aspect of it. And then I had an opportunity to get in retail, and I ended up buying a Radio Shack franchise and ended up having being involved in three of them. And it was a ton of fun. One of our stores in the year 2000 was the number one Radio Shack franchise in the world. So
Wow,
we were doing really well.
that's amazing.
And ultimately, I decided I want to get back in real estate, because in real estate, what we do is pretty romantic.
Yeah.
And, the Radio Shacks, for people that don't know what a Radio Shack is, it's just a lot of electronic gadgets that nobody really needs. It's fun to have, but it's not needed. And so I struggled with, am I really making a difference? And real estate, we make a difference. You think about it, when we are creating real estate, good or bad, and hopefully most of your memories are good, we facilitate the places where those formidable memories that you create are taking place. Whether it's the movie theater that you go to the movies with your family, whether it's going to the local strip mall to have lunch with your friends, sitting in the living room floor watching TV, we make that happen. You and I and your listeners, we make something pretty cool happen. We're making a difference. And that's why I went back to real estate, because we make a difference in people's lives in a big, meaningful, impactful, long-term way.
It's interesting you say it that way. Just the other day, I had to take a trip up. I'm in Denver and I had to go up to Broomfield. So for the listener that doesn't know Denver that well, it's maybe a 35, 40-minute drive. And I pass by my old neighborhood, basically where I grew up and where I worked when I was, I started working when I was 13. And it was just so interesting. I was like, well, I think I'm just going to drive by the house I grew up in. And I got to tell you, hearing what you're saying, and like the memory on the living room floor, man, that flashed back to me when I drove over there. So I can definitely relate, and I'm sure a lot of the listeners can as well.
Yeah, and it's pretty cool. In your capacity, you guys provide funding to make that
Right.
happen.
Right.
Without you, projects don't happen because they take money. So whatever aspect you're involved in real estate, you're making dreams happen.
Yeah. No, we say it all the time. This is a win-win-win business. I mean, we really are. We're sandwiching ourselves between a developer like you who's out there profiting and making a difference on the real estate side, and our private investors are earning that passive income, right? And I'm sure it sounds like you might work with passive investors. I'm not sure exactly. We're going to get to that, but yeah, I mean, I love real estate and I love this business, and everybody has their own niche, as you've alluded to. Your niche is developing, which is not the easiest niche in real estate to get into. So why development?
I really love the actual hands-on and making it happen and creating it. For me, it's fun. whether it's greenfield, a farm that we're converting into something, or we had a case where a school that had fallen disrepair was no longer used and the ground is contaminated. The thrill of saying, what could be here? What is the need in the community? How do we create something pretty great? And say, all right, in the school case, we got to tear that down. We've got to clean these soils up and make it safe for the people that live here and the environment, and what kind of businesses, what kind of homes can go here. And that's just a thrill to me, is designing that. And then when we're all done, I can go back in that particular project as an example. I can go back and now the trees are 30 feet tall.
That's
And
cool.
there's people riding bikes on the streets. It's like, I love it. I love it. Yes, development is complex. I'm really fortunate to have some super smart people that I'm surrounded by that know what they're doing. But I just love it. It's a thrill.
And you're out in Minnesota. So is that school? I want to hear more about this. I'm very fascinated by that story. Is it in Minneapolis?
The where we're
The
at, or the
school.
school?
The school.
The school is a suburb of Minneapolis.
So it's
Yes,
not in the city of Minneapolis.
that's correct.
So I've heard, Dale, a lot of people, a lot of developers exit Minneapolis. They refuse to do business inside the city. Are you having any experience like that, or walk the listener through a little bit of what are some of the challenges with government in your business?
This is where we tread lightly, because
Yeah, say how you feel.
we're really dependent on government to be successful. Minneapolis and St. Paul are both challenging cities to develop in. There's a lot of red tape, a lot of regulatory requirements. The political environment is very risky, because you don't know what they're going to do from one day to the next. So I do know lots of people. We do not actually. We've owned some apartments that we've rehabbed in the city of Minneapolis that went really well. They were fantastic to work with. The city was, but we were taking something that was, falling apart, it was unsafe, and turned it into something that was safe and stayed very affordable. And so the city was very cooperative. We have not ever developed in Minneapolis to St. Paul,
Okay.
and that is a strategic decision because of the regulatory risk that's involved. So most of what we do are, the second and third and fourth ring suburbs.
Yeah, and I am seeing a lot of success in the second ring.
Yeah.
So the development process with the city, I guess I don't want to spend too much time on this, but that's sort of where you make your money, right?
Yeah, it's about buying the right property,
Okay, that's
and
good.
paying the right price. And so there's a lot that goes into, you got to buy the right property and understand what you're getting. If there's something that you don't see when you buy it, it could destroy the entire project. If you have a soils issues, an environmental issue, whatever it may be. And so, the buy is really critical. And then it's the development. What am I going to put in here? What does ultimately the community want and need? How do I design it to make it profitable? I mean, the reality is I love what I do. This is super
Yeah, I can
fun,
tell.
but I also do it to make a lot of money. The goal is ultimately, I don't know anybody in this business that doesn't want to be rich.
Right. I don't either.
So
You can make a difference and money.
Exactly. And so we do it to make a lot of money. And so if you don't buy the land at the right price and understand what the risks are, because there's always risks. A friend of mine, Keith Cunningham, he's written a few really great business books. Keith shares frequently a principle. When you look at a deal, you got to say, what is the best case scenario? What is the worst case scenario? And if you don't see the worst case scenario, you better not do the deal, because there is a problem. There is a risk to everything you do in life. You're trading something off. And so you do that. And we take Keith's principle, and we will do this, and we'll be in the room and we'll decide if we're going to buy a project or not. And I'll randomly assign somebody and say, okay, I need you to argue why we should buy it. And somebody else, I need you to argue why we shouldn't buy it. And then I might randomly just say, oh, I want you to switch sides. And if they can't articulate a really strong argument for both sides, that's when I start getting worried. And then when they articulate it, then we say, okay, we know the upside, but can I live with the downside? And if I can't live with the downside, we pass. We don't do the deal.
I love that. I love how you put the brains in the room and challenge them on both sides of it. I haven't heard anyone do it quite like that. So that's very fascinating. How big is your team?
Right now that are on payroll, I think we're right about 25.
Ah, it's a big operation. So for the listener, I mean, so a lot of the listeners are like they're developers, but they're like fix and flip. Like I'm going to go in there and remodel a kitchen and then I'm going to make 30 or 40 grand. So how does someone like that get to your level? What's some advice?
That person, that is such a great place to start. You've got to start somewhere. In the fix and flips, there's a lot of money to be made there. And on a smaller scale, you're learning the risks.
Yes.
When all of a sudden you get in there and go, oh my gosh, I didn't anticipate this. Well, now you're dealing on a single house instead of a large project. So it's such a great place to get started. And then you just start building from there, because now you go find a 6 unit building, go find a 30 unit building, and the same principles apply. Now it's just on a larger scale, but you've made your mistakes. You've lost your money on the single deals, but those same things that you learned on that single deal, now that you've got a 60 unit building, you can apply those same principles. You can apply those same principles and say, hey, all these lessons I've learned, and now you're not making that mistake on 60 units, you made it on one. And so you just start building up, and your network is going to need to change.
Yeah.
The person that is going to find you and source you that 60 unit building is different than the person that's sourcing you the single unit deals. And as we all know, the earlier you can get it, the off market deals are often their best deals. But as soon as it hits a multiple listing service or some public service, those are sometimes harder. And so the same thing. So you're going to need to start working. Who's my network? How do I find that 60 unit property? And then it just can parlay into there. Is the same thing with development. If you understand now a 60 unit building and you rehab it, well, you understand the fundamentals. And now if it's a piece of property that you can build a new 60 unit building, and you go, the margins for commercial general contractors are so low, you just hire a contractor, hire the pro that knows how to build that thing. And you just keep building, and then eventually next thing you know, you've got a whole bunch of units and you're starting to make a lot of real money.
Yeah, I love this because I got to tell you, Dylan, it sounds like you do a lot of podcasts. So you're out there guesting. We're almost 100 episodes in here, and I don't remember one guest, not one, that hasn't come to what you just said, the power of your network. Now, you went a little bit further to even say your network will change as you grow. And I might even take it a step further and say you might push that direction. It will naturally change. I agree with you. You could create that though, right?
Yeah. I think you want it to change. I love the analogy of you become the average of your five closest
Yeah, me
friends.
too.
And with that analogy, people that are trying to grow a business, if you're in real estate, you likely have had people in your life that are like, why are you doing that? Oh, there's so much risk. Oh, that's dumb. Or, all these negative things. And if you're in real estate, you're an entrepreneur at some level, and you want to make a difference, and you want to make a lot of money, and you want the challenge and the thrill. You want all of that. And the person that's saying, oh, there's too much risk, don't do it, they can't even fathom how your mind operates. But our minds are so susceptible to that negative that you've got to screen it out. And so, how do you create? I'm not going to, I love my family, but I have lots of family that are never will take the risks I'm willing to take.
Right.
I'm not going to give up all my friends, but I have lots of friends that would never take the risk. So how do I create that core group? And that's where, as you grow, you're going to mature beyond your sphere.
Got to be
You know, the,
selective.
the sphere that's going to excite you about doing the fix and flip, that's super important.
Yeah.
But when you move up and now you're doing a 30 unit and 100 unit, that peer group has got to change. And so it's got to be evolve. And that's a really hard step for a lot of people to take, I think.
Well, it's scary.
It's really super scary. Yeah.
Yeah. All right. I want to hear about the school. So you bought a school and you had to I guess reposition it, but what you did was scrape it. What can you tell us the story?
So yeah, it's we've done a lot of work in Minnesota. There's a consulting group that works with cities, and they do a lot of consulting, financial consulting, development consulting. And we had done some work, and they called us up and said, "Hey, we've got this project. The city wants proposals. We think you're a good fit. Would you be willing to do this?" I said, "Yeah, we would love to." And so we went in and we met with the city. And one of the things that really has helped us to be successful is to get the stakeholders involved early. Because if you've done any development, we all go to the planning commission, the city council meeting, whatever meeting, just like, oh, I hope it's not a full house.
Yes.
And
I hope
everybody's
not
screaming
too
and
many.
yelling.
I hope the neighbors don't show up.
Yeah, yeah, this guy's going to destroy my entire life because he's going to build someone a house, or,
Yeah. I've been
and
there.
and so we found that the earlier we can get people involved, so we said, yeah, we're interested. So we went and we met with the city council, the planning commission, the neighborhood, said, what is it you guys want?
Yeah.
What is it that your vision is? And so we got a lot of great feedback from them. And the school had stopped using it. There was asbestos in the building. There's lead-based paint. They had some underground heating oil for heating tanks.
Okay, that makes. I was going to say, well, how does a school contaminate that? But that makes sense.
Yeah. And so that had leached in because this school was, I don't know, 80, 90 years old. And,
Okay.
so the tanks had leaked. And so we came up with a vision of what did the community want. And the advantage when you do that is then when you go for all your entitlements, oftentimes it just flies right through because you've got the support of the community. You already, people just want to be heard. Sometimes you'll put something in that they don't necessarily want, but you listened. And that's often what they want. So we got this figured out. So then we went in and demoed the school. It was very costly. We had to take the soils and dig them out, all the contaminated soils. Then we had to send it to Wisconsin, to a place it's like an incinerator that basically burnt the soil
That's so interesting.
until the contaminants were gone. And
Okay.
so then they bring it back. We put it back down. Demoing the school is very involved because you're dealing with asbestos and lead-based paint, some of those things that are older. And so, there's a process that you've got to go through. It's not just, let's throw some dynamite at it and haul it to the junkyard.
Yeah.
And so, yeah, we did it. And then, with all development, we designed the roads, we designed the product that's going to go there and built it
What's
and
going
sold
there?
it. And in this particular one, I think we built, it was just under 80 houses, I believe. It was all homes. We transitioned from, there's a busier road, and we transitioned from narrower, smaller product to larger homes with yards.
Cool.
And that's part of what the feedback that we got from the community. My desire is I wanted to build a build for rent community. All homes, we'd keep them all, we'd rent them all. The city was absolutely dead set against that. So it was like, okay, that's a non-starter. Let's rethink this.
Okay. That's so cool. But you didn't do the development. You didn't do any of the infrastructure.
Nope. We do all the
Oh,
development.
you did it. You build the houses too?
Yep. Yes. Every
Okay,
aspect.
this is great. This is
the
great.
demo, the reclamation, put the streets in, design the houses, build the houses, sell the houses, all the way through. We do everything from start to finish.
Okay, this is great. I want to help the listener understand the different ways that they could profit from a project like this. This is a very interesting project, and these are out there. So can you help us understand, like, when you made it through the city and you got that approval to do your homes, now we have what we would call paper lots. Now it's not a lot that's ready to go, but it's an approved plan. So what is the value increase by getting that city approval to that piece of property? Approximately.
It really varies from project to project, but I mean,
On
if
this
you're,
one.
at minimum, if you're not 20%, don't do the deal.
So 20% increase in value from what you paid for it to what it's worth once it's approved.
That's kind of the minimum basis.
Okay, that's cool. Because there's a lot of money in just that.
Oh, yes.
Just,
I would advocate you should be north of 20%. For me, it's like 20% is kind of your base. If you're not doing 20%, don't do the deal. But, in that phase, it can be 50 to 100%.
Yeah, exactly.
In value.
Depending on how challenging the city is to work with. And
because we have, it varies. Probably the most complex project we ever did had a city office on it, had several apartment complexes, it had strip centers. The strip centers had dry cleaners, and dry cleaner
Oh
chemicals
yeah.
are very, you know, and they
I'm
were
seeing a
pouring the
pattern
chemicals
here,
out the
Dale.
back door. And in the state of Minnesota, it depends on the state. In the state of Minnesota, when you abandon a right of way, meaning a road, it reverts back to whoever dedicated it. So if you're changing your roads, it's going back to whoever dedicated it back in 1920.
I didn't
So you
know
have
that.
legal issues. And so a project like that, okay, we're tearing all these buildings out, we're, relaying out the right of ways, we're reclaiming soils. You better be doing 150% on that
Yes.
because it's just so complex. Whereas on the
And
flip
risky.
side, if I'm taking a farm field and it's pretty straightforward, then I'm going to be more like the 20%. So,
Got it.
it just really depends on what's the investment energy and, time that you're having to invest.
Okay. And then, so once you get your approval, now you have to get the lots. You got to get it ready. So in this case, it was a significant amount of work, more than normal. But then you got to do the roads and you got to do the utilities and you got to, get the drainage all figured out. You got to do all of these different things that all cost money to get the lots to what we would consider a finished lot. Like now we're ready to build on it. So if we're going to stick with your theme of margins, what kind of a margin should we be looking at as a developer on getting to a finished lot?
For me, our rule of thumb is it's a minimum 20% at each step. So 20% for
Okay,
entitlement
that's
and
good.
20% for development.
Okay, and
But
then
that's kind of the
20% for
minimum.
building the house too?
Uh, the houses, yes, we're also a minimum 20% on the
Oh,
house.
that makes it real simple.
But it does vary. It's
Sure.
like I said, if it's more complex, but 20% is a pretty good rule of thumb each step of the way.
Yeah, and I see developers come in and just get the lot, just get a project approved and they get out. So they're fixing and
I know
flipping
lots of
projects.
developers. There's a lot of money to be made. People that are thinking about that. The nice thing about the entitlement process, if you can understand and become an expert at that, a lot of times you can do it with very little capital
Oh, sure.
because we almost never close on a project until we have all of our entitlements.
Yeah.
So I might have a project that I'm going to pay $2 million for, but I'm not giving you $2 million until I can start putting my sewer pipe in. And so it's really common that I see people that are really successful. They go in, they get the entitlements, they have it ready. As you had pointed out, we call this a paper lot. So it's on paper ready to go, but we haven't put the streets in, we haven't put the utilities in. And you can make a lot of money at that because
Yeah.
instead of having to shell out $2-3 million for the land, you're just shelling out for the entitlements. Now, that can be expensive. That can range from a few $1,000s to $10,000-$20,000 per lot. However, you didn't have to shell out the $2 or $3 million. And so now all of a sudden, if you can make a 20% on, if the project's 3 million, you can make 20% on that, you know,
Yeah,
plus
that's
what your
huge
expenses
money.
are, you're coming up with a couple $100,000 instead of a couple of $1 million to make. Well, that's a pretty great return on your money.
Yeah, and it de-risks it because you're not actually closing until you know it's a
Exactly.
viable
Yeah, your
project.
biggest risk is, oh shoot, I found a problem and now I've lost my money that I've done on the process. The other thing is it keeps your overhead minimum.
Yeah.
You hire engineers to do the engineering, you hire soils engineers to do the soil, you hire people to do a lot of this, and now all of a sudden you don't need to have this big overhead to make it work. You don't need to even have an office because it's amazing how great Starbucks works for an office.
Yeah, so
And
I
that's
guess the
where you make
point here
money
is
is figure out how to not spend it.
dollar saved is more than a dollar earned, right? Because you're not getting
Exactly.
taxed on
Yes.
that. This episode is brought to you by Pine Financial Group. Pine Financial is a private lender specializing in short-term rehab lending to real estate investors. Got a property that needs some love? We can help. We are able to offer funding solutions because we raise private money from individual investors. With more than 15 years of experience, Pine offers passive investors an alternative that provides stability, consistency, and security to your portfolio. If you like real estate but want to avoid the ups and downs and effort, a Pine mortgage fund could be a perfect fit for you. Accredited investors will experience an 8% preferred return and profit sharing. Diversify your portfolio out of Wall Street and into Main Street with a Pine Financial Group mortgage fund. Get more information at pinefinancialgroup.com. That's pinefinancialgroup.com. You're out here podcasting, so tell me what benefit you get from providing this awesome information and sharing your story with people. What are
Yeah,
you trying to
we
accomplish?
started this year Centric Capital Partners. It stemmed from a few years ago. Our purpose, cause, and passion as a company is we improve everything we touch. Whether it's people that are working on our team, trade partners we're working with, an apartment complex we're rehabbing, a development we're creating, we want to improve everything we touch. And we give our employees the opportunity to buy houses at a substantial discount.
Awesome.
One of the things I encourage them, not only if it's for your own personal use or for your parents or a family member, is take advantage of this frequently as you can and build up a rental portfolio. Build up wealth for yourself, for your retirement, for your family. Well, I have one employee that really takes advantage of it frequently. And a few years ago, I was talking to him. Well, he's W-2. He's smarter than I am. He's super talented, and he's a super important part of our company. But because he's W-2, I'm self-employed, there are tax advantages I get that he's not entitled to. And that just bothered me. It's like, this isn't right. I want to be able to help him build wealth at the same rate that I can build wealth. But yeah, I can do it so much faster just because my income's on a 1099 and his income's on a W-2.
Yep. Right.
And so that's where it all began. It's like, how do I help him build wealth? How do I create a mechanism to help him build wealth at an accelerated rate? And then it went from there. Well, what about the people we care about, our trade partners, other people who are involved in? Well, what about my family? What about my friends? And ultimately it went, anybody that wants to build wealth, come, let's go do it together and let's have a lot of fun doing it. And that's where we got to today. And so now we have Centric Capital Partners where people can co-invest on deals with us on the projects that we're doing. So literally, as somebody becomes a part owner, if it's a for sale housing, in this for sale housing. And I think that's, lots of people want to be in real estate, but they're not sure how.
Yeah, that's totally right.
I'm a doctor and I want to be in real estate. I'm a really good doctor, but I don't know real estate. Well, this is a chance. Now you can be part of real estate. You can get in your car and actually drive through it if you wanted and see, I'm pretty sure if I own Tesla stock, Elon's not going to invite me into his manufacturing plant just because I own stock.
Right.
But here you're making a difference and doing something. So that's a lot of why we're doing the podcast, is just to start getting exposure, and they're actually pretty fun.
They're fun, right? You get to meet some cool people. Like, once I hit stop record on this one, I'm going to have a conversation with you because I have a project that might fascinate you.
Oh yeah, I love hearing about deals.
Yeah, well, we'll talk about it. Cool. So you're looking for partners, investors, that kind of thing. How would someone get a hold of you?
So we've got a website, centriccapitalpartners.com, that shows whatever projects that we're offering at any given moment. And that we do have, right now, we're trying to figure out how we could do this otherwise, but they do have to be an accredited investor, meaning they're making $200,000 a year or have $1 million in net worth. We do have a $100,000 minimum investment, but most of our projects, we're raising capital of the 2 to 3 million range right now. And we decided to do that. A lot of times people create a fund and it's a $50 million fund and then we diversify it, which I like as well. But we decided let's do it to where people can invest in a specific project and they know exactly what the expectation is, exactly when they're going to get out of that. And so far it's working really well.
Okay. And it's centracapitalpartners.com, and that's where we get more information about your project. So we'll say that again near the end of the episode, which I know we're getting close, but I want to hear a little bit about your thoughts on the current environment. Now, when we're recording this, is a pretty interesting day because we were just notified of who our new president's going to be. So tell me, how do we navigate this volatility? What do you see coming? Maybe I should re-ask it this way. What are you doing to protect yourself and your company?
I'm a big believer in you'll find what you're looking for in life. If you're looking for opportunities, you're going to find it. If you're looking for problems, you're going to find it. So 2 days ago, I would have told you, from an opportunity standpoint, it doesn't matter who's the next president, because we have one, that there's a good chance we're going to see the opportunity zones renewed and extended and expanded. That's going to create some great opportunities. With the other, we would have seen a bunch of tax credit for first-time buyers, which is going to create a different set of opportunities. We made a lot of money in 2010 and 11 and 12 when in real estate, people just didn't know what to do. The sky was falling from the 08 crash. We made a lot of money working with banks, repositioning things and selling them. Today, because of the inflation we've seen the last 3 years, because of the interest rates that we're currently seeing, we see the greatest opportunity as a first-time home buyer. And so that's where we're focusing our energies. And so I think it's just super important as you look at the climate that we're in, the political climate, the different things, is look for opportunities and you'll find them. I hear people talking a lot, at the day of this recording, interest rates are 6.5%, 7.5%.
Yep.
And I hear people that say, I'm going to wait for interest rates to come down. Well, you look at in the 60s, interest rates were really low. In the early 70s, they went up. And people said, I'm going to wait for interest rates to come down. Mm-hmm. And then in 1993, they got back in real estate when interest rates coming down. So they lost out on 2 decades of wealth building because they were waiting for the right climate. I know a lot of people that made a ton of money in those 2 decades in real estate. And so you've just got to look for the opportunities. And, interest rates is a great example. If I can make money at a 7% interest rate and they go down, I can refinance it. Now I'm making a killing. And if rates go up to 9, I'm in a really good position because I'm now fixed at my 7.
That's a good way to look at it.
Yeah. Figure out how to do deals and do deals.
So, we've been hearing that the crash is coming. And this has been pretty much since the last crash, which was, you alluded to, 2010. 8, 9, and 10 were really the tough years. And what has happened since then? One of the most amazing runs in history. Now, it was influenced by, trillions of dollars over 6 of stimulus. But look at what people missed out on. This is exactly what you're talking about, right?
Yeah. And okay, we go into recession, that's going to create new opportunities. One of the things that we're seeing out there is a lot of people bought apartment complexes in 17, 18, 19, 20, and they were at cap rates that were low single digit. And they were also at interest rates that are low single digit. And a lot of them have balloon payments due, meaning 5 years after they got the loan, 8 years, 10 years after they got the loan, they've got to pay it off. Well, now all of a sudden that low single digit is mid to high single digit interest rates, and the thing doesn't pencil anymore. Right. And now what do? Nobody's going to finance it. Well, what's that going to do? That's going to create some really fantastic opportunities for those of us that are ready.
Yep.
And it may not happen if interest rates go back down. Well, guess what? That's a whole new set of opportunities we get to go do.
Yeah. So if you're buying, and what I'm hearing you say, as long as you're buying, if you're trying to build wealth and you're buying and holding, because you even said you tell your people, your team members, to keep some of your houses that you buy. That's how you build wealth. So if you're doing that, then that gives you the opportunities. If rates if we hit a recession, which I don't think is on the horizon, by the way, but let's pretend it is, rates will come down, both short term and long term. They'll both come down.
Yeah.
And then that's your refinance opportunity, as you said. If we don't have the recession, which is far more likely, in the short term, then you're just going to continue to have the appreciation.
Yeah. Look for deals. Surround yourself with people that are doers, that have some optimism. Now, don't have stupid optimism. That's where you get in trouble.
Yes. But so here we are again, talking about the people. Like, this is important.
Yeah.
This is important to your network.
You'll find my wife and I moved to Las Vegas when we were first married, and we lived there for 2 years. And I hated Las Vegas.
I bet.
There's nothing about Las Vegas I liked. I hated everything about it. And you know what I learned from that lesson is we found exactly what we were looking for. We looked for all the reasons to hate Las Vegas. We didn't focus on the fact that there's some really beautiful hiking in Las Vegas. Yeah. We didn't focus on the fact that there's some really great friends we made there. We didn't focus on the fact that there's a fantastic lake and a dam there. We focused on all the things we hated, and that's what we found. And that's why we hated Las Vegas. And I think that's true in business, that you're going to find what you're focused on. If I'm focused on the economic climate is whatever negative thing I want to call it, that's exactly what I'm going to find.
Yeah, that's right. That's great. I love this. I love your view on that. And I agree with you 100% on everything you said. There's going to be opportunities. I think right now things will be a little bit more stable, which that too creates some opportunities. So 100% agree with you. All right. I'm going to go through. So I took some notes here. I'm going to go through my notes if you're cool with this, Dale. And what I would like for you to do is tell me, like, share, enlighten me further if I'm missing something. So we started off with your story about why real estate, and you started in real estate, got out of it, opened up a Radio Shack, which is hilarious, by the way. I know some people that have done that, and then you went back into real estate because you want to make a difference, and you can make a big difference. And you went on about more than just with the buyers of the property. I mean, you're talking about your friends, your family, and your own team, your own staff. It's about buying the right property, you said. And then what's the vision? What are you going to do with the property? Price is obviously important, understanding the risks. So you talked about looking at best case, worst case scenario. And if you can't live with the worst case scenario, don't buy it. Your network will change as you grow. And then we both talked about taking that a step further and forcing your network to change so you possibly can grow. It will help you grow by changing your network. So you can be intentional about that. Get the stakeholders involved early in development, all parties, including the neighborhood. So we do neighborhood meetings as well. So I think that's super important for the listener to hear. There's lots of ways to make money in real estate, you guys. You also said keep some houses, and that's how you build true wealth. You will find what you're looking for. So we spent a little bit of time on that. And you're absolutely right. Something my dad shared with me early on was the quote. I don't know who the quote is from, but it's whether you believe you can or you believe you can't, you're right.
And Henry Ford used to say that.
It was Henry Ford. Okay. Well,
Yep.
I love that. I've lived my life because of that. And my dad shared that with me when, gosh, I might have been 8 or 9 years old. I was very young. Surround yourself with the right people. That came up multiple times. So it's your network, right? And that was the last of my notes. I put, you will find what you're looking for. Sorry to say that. So those are my notes. How did I do?
Oh, that was beautiful. I would add, Ben Hardy wrote a book called Who Not How.
Yes. I love that book.
Yeah. And it's such a good principle, especially in real estate. So often we focus on the how, instead of focusing on the how, who do we need? Who's the expert in this area that can help me succeed versus on how do I do something? And that I think is just such an important principle. And in that book, Ben does a great job articulating that view.
And he's fantastic in Audible. I don't know if you listen to it, but he's very good.
I actually belong to a networking group that Ben and I are both part of. So the principles are taught by Dan Sullivan, and then Ben took them and put them into in the book format. Dan Sullivan's an amazing instructor.
Yeah, and
in Ben's Audible, an amazing writer. And so I've listened to all 3 of their books on Audible. But it's fun to be with them in this networking group and, hear their perspectives and learn from them.
That's amazing. I might want to ask you more about that networking group, but we're running out of time here. But for the listener, those audiobooks are cool because Dan actually is in the audiobook.
Yeah.
So he's being interviewed through the process as he's reading the book to you. So it's pretty amazing.
Which is interesting to note is those interviews with Dan in the Audible are different than the written. And so it's kind of cool to do both because you're going to get different perspectives, slightly different perspectives.
And you have his other 2 books that are pretty popular behind you on your shelf there, huh?
Yeah. Gap in the Gain and 10X is easier than 2X.
Yep. I love all of those. Cool. All right. So one more time, your contact information. And then if you would like to, maybe one final piece of information for the listener. So think about maybe a newer real estate investor, couple deals under their belt, really wanting to get to where you are. What advice would that be? So start with your contact information. We'll close with the final piece of advice if you want to do that.
Yeah, I'm pretty active on LinkedIn at Dale R. Wills for LinkedIn. And then for projects that we're doing, investment opportunities, just what we have going on, centracapitalpartners.com is a great source. I would say the most important thing is never stop learning. You've got to continue to grow. Podcasts are an amazing way. If you're new and you can't afford things, this podcast is a perfect example. You've had many really brilliant guests on here that we can learn from, that we can grow from. So continue to watch podcasts, subscribe to these so you're seeing them. Read books, create that sphere of influence. And then as you have some success, by your sphere of influence, meaning join groups of other like-minded people so you can surround yourself with people that are growing. And just like we talked about, your networking group that's going to help you find the fixer-upper is different than that group that's going to help you find the 60 unit. The same thing with your networking groups. That group that's going to inspire you to grow, you're going to eventually grow out of that group and you're going to move on to a next group. And that can get very expensive. And so you can't necessarily do that today to be in the group that you want to be in 20 years. And so it's just a line upon line, and you grow into this, but your mindset is just so critical, I think, more than anything, because I can hire anybody that's an expert, but if I don't have a mindset that I could succeed, I can have all the best experts around me and it doesn't matter.
Yeah, I did the exact same thing you just said. I bought a network. Now I worked my way up to this, right? But it's over $30,000 a year to be in that room, and we only meet 4 times a year, so it's very, very expensive. But that's the room that has made a big difference.
Yeah.
So I agree. All right. Well, I want to say, I'm going to close with this. I really appreciate your time. I know that you're busy. You're developing thousands of units and you're busy, and you wanted to jump on the podcast with me and hang out for 30 or 40 minutes. So I really appreciate you doing that. And for the listener, I appreciate you. We want to be doing this every for you. You have lots of different podcasts you could be choosing from, and you chose to hang out with us for 30, 40 minutes. So I really appreciate you. If you got any value out of today's episode, please give us a 5-star review and share the episode with a friend. And with that, I hope you make this day a great one. Thanks, Dale. Hey guys, I hope you enjoyed this episode as much as I did. If you did, please be sure to follow and leave us a review. Oh yeah, and tell a friend.